Sachchidanand Shukla joining us now, Chief Economist at Mahindra and Mahindra. Sachchidanand, what do you make, really of the kind of commentary we've been hearing, whether it's from HUL, HDFC Bank, Dabur? All of them have been sounding cautious. Even after delivering a decent set of numbers, the outlook going forward continues to be a little weak, quite weak in fact. Auto majors, add that to the basket. So what are you making of some of these commentaries coming in from top management?
I think it is only understandable that people are cautious now. The slowdown is not something that is new or has caught people by surprise. We have been seeing this manifest in GDP data. The second half of last fiscal was quite moderate if you look at the numbers. So it is pretty understandable that people are talking about this in terms of moderation. I think the choice we have is to continue to look at the data as we get it. I think it is just a manifestation of what is the underlying as of now. But we can choose to look ahead, shift our gaze forward and see if things can improve from here on. I do believe that as of now, as we speak, we are indulging in a bit of a self-flagellation. If I look at the global data points, globally, if you look at emerging markets, private consumption, it was about 5% growth in 2018, early 2018. That is more than halved. If you look at retail sales across the emerging market space, from 5%, it's gone down to almost zero. So this is not something that has taken people by surprise. In fact, you can see the IMF coming every single quarter. Their outlook is almost like brokerage firms now. Every single quarter they are revising it down in homeopathic steps. So I think this is just a confirmation of what we already know. But going forward, I do believe there is a case of optimism. And please remember, optimism is the engine of capitalism.
Could you talk about the impact of the slowdown after June and July? Have things slowed much more? And that the reason for the talk of corporates also being muted? Or would you say that there perhaps could be an uptick as the festive season actually approaches?
See, it's very clear. The slowdown that I spoke to you about on the macro front, the GDP front, the gradient, the change in slope, the delta is impacting sectors differently depending on which sector you are in. And that is what is getting priced in as we speak. As far as the second half, you spoke about the festive season. I think there are clearly pointers where we see growth inching up gradually from 6 to that 7% corridor in the second half. India, I think we all know, is a capital scarce economy, and the financial cycle has a major bearing on the business cycles here. We have already seen the cost of capital come down. Part of it is accidental, part of it is by design. What I mean is we have seen the Fed U-turn. And we have also seen the government talk about the sovereign funding from abroad, and dollar funding from abroad. That has brought down the yields significantly. So if cost of capital has come down, it will feed into the system with a lag. We also know that the government uses cash accounting, right? And there were some payments which were deferred, which are still feeding into the system. People have not been paid, etc. But the government has started to spend now with the budget over, with the elections over. So the events or the uncertainty involved is over. And we'll see a gradual shift in momentum. And also remember, the base is going to be coming to help the numbers. So what we see is definitely the move from 6% gradually to 7% as we approach the second half. I think there is one more quarter where we will see sector or segments reporting a significant downtick in their numbers or the anecdotes. But I do clearly see that the second half is giving us a case of optimism.
When you say that, do you think that that holds true for even the auto sector, which has been seeing 4 straight quarters of a slowdown? That it's only one more quarter of pain before things recover?
Again, I would like to make a distinction. One is the macro linkages, which is got to do with the GDP and the overall consumption slowdown. There are sectors here which have some other issues, which could be regulatory, which could be changes in norms, etc. So clearly, while I'm not talking on behalf of the sector or I'm not talking about a particular sector, I want to make a clear distinction between the broad consumption slowdown and the linkages which are there, and also sector-specific issues which may be regulatory, which may be having to do with the architecture or the business model changes of that particular sector. So you will see a differential impact across sectors. So while I'm saying that second half is going to look up, there will be definitely sectors which will be impacted differently.
Okay, fair enough. So you're saying that we will see a pickup near the festive season. Do you expect consumer finance rates also now to start coming down? Are you seeing that transmission and improving liquidity? Are you expecting a pickup on that front?
True again. If you look at the banking sector, I mean, we've seen some of the banks respond to the cues. Deposit rates are down. We will see gradually the lending rates also come off a bit. We are seeing this momentum come from the banking sector, the banking system. We do have a problem, however, on the NBFC front, which has been actually a big factor in pushing the discretionary consumption piece across sectors. There, I think there could be, the lag could take longer. But I clearly see the banking sector led lending part and the lending rates coming off over time as we move forward.
All right, thanks for spelling it out for us, just giving us a detailed insight as to what's going on with the overall consumption sector, when we're likely to see the prolonged slowdown continue up until. That's the view on the state of the economy and the growth pangs in consumption in specific.